and the technicals of the market. And Rahul Sharma from JM Financial is joining us with just that. Rahul, stick to your view that around 1,000-point rally is what we were going to witness in September. We are halfway through, but 20,500 on the cards now?
Yeah, very good afternoon. More than 500 points, I would say. We're very well on track to hit our target of 20,432 odd. Now, the point is, what has happened in the last few trading sessions is FIs have increased their long positioning on the index futures. As of yesterday, they have around 60,000 contracts long, but it is the retail HNI category which continues to add shorts at every rise. And generally, we've seen in the past that whenever we've seen such periods where we've seen retail getting stuck into one kind of a position, the market keeps on going in the opposite direction. So my sense is we have this bull run is not done yet. We've definitely called for a very strong call that book profits in mid caps and small caps, especially the lower mid caps where we've seen phenomenal returns over the last few weeks. Take money out from these two sectors and put it into the large cap category where we see the next round of participation coming in. So a switch hit is what we are recommending to clients. At the same time, as far as the sectors which were pulling the index down in the previous month are now back to green. So one is the PSU banking index, which is the strongest of the lot as far as A, breakout, and B, headroom is concerned. So from a fresh initiative, PSU banks look very solid. This has its rippling effect on the banking index. So banking Nifty again comes back into positive territory or bullish territory from negative in the previous month. And lastly, the energy space is where we are seeing renewed buying interest happening. So these are the three areas of the market which should keep the tempo up. IT is one sector which we identified a couple of months back, continues to stay strong. And broadly, this is like around 70% of the Nifty weightage, which continues to support a bullish uptrend. So not only is the index trend up, but also the components are aiding in this upward move. And on the derivative side, we have clearly one segment of the market, or rather one segment of participants getting it completely, on the wrong side. And at the same time, FIs continuing to add on to long positions, or rather pyramiding their way up as index has moved higher and higher. So stay long, stay bullish is the mantra.
Hi Rahul, Somat this side. So today in trade we are clearly seeing that sugar and metal stocks have been buzzing. In fact, the metal index is one of the top sectoral gainers, 2% up in trade so far. How are trends looking from long-term perspective? Is it the right time to still get into metal or sugar space?
Yeah, so since you asked long term, metals would continue to do well, especially, if you made money in the recent couple of months. I think this is a good time to book profits, maybe look to re-enter into dips. But if you're a long-term investor, I think there is another 10 to 15% upside to be had in the next couple of months. At an index level, at a stock level, the returns can be higher. And at a slightly longer time frame, like 1 year to 18 months, I think the structural trend is still up, and we could very well continue to see this rise happening. As far as sugar is concerned, this is one sector that we have also been bullish on. But I think it's wise to take some profits off the table, maybe book around 30% profits at these levels, and another 20% up move should see us at hitting our targets on the sugar space as well. So we are carefully cherry picking in terms of what sectors still have more headroom to go, because the more we go higher above the 20,000 mark, the more prudent it becomes to be selective in your stock selection as well as sectoral allocation.
And what would be your top picks?
Yeah, so from a trading perspective, we like Gas Authority of India. The stock has been on the short-term charts, it looks like 200 is on the cards. But even if you are an investor, there is a good 15% upside that can be had even from these levels. We have been recommending this stock since around 170 odd, but I think still the PSE sector is not done yet. And especially since the energy index is also breaking out and come back into the buy territory, we feel this stock could lead the way up. Secondly, on the financial space, we like Bajaj Finserv. Now, financials were a bit of a pain in the previous month. This month, we feel that there is a catch-up rally to be had. So we are expecting around 1650, 1700 to be tested in Bajaj Finserv in this month. One can trade long on this one with stop loss placed at around 1480 odd, and we could see the sector do well along with the Fin Nifty. So these are our top two picks where we feel that there is there is more upside to be had, especially not only for investors but traders alike.
Okay, Rahul, on that note, we let you go. Thank you so much for joining us. So the strength in the public sector entities continues, and of course, there are a lot of sectors which are looking ripe for that up move to continue. But shifting focus and